Good morning, everybody. Morning, Jack. Morning, FTNet. Morning, Danny. Morning, Paul. How are you all doing? Happy Monday. Another week, another conflict. Always the way. So we've got quite a lot to unpick today. If it sounds a bit echoey and weird in here today, I'm moving and I've started packing my office. So all my stuff off the walls has gone, and it just sounds really echoey in here today. But there's nothing much I can do about it. So morning, it's time. Morning, Marco. Quite a lot to unpick from this weekend. Obviously, Trump said we might attack. I'll think about attacking. I might do something in the next couple of weeks. We'll have to wait and see what happens. Oh, press the button. So obviously it's all kicked off. Obviously with Trump's attacks on Iran, obviously World War III is kicking off now. Well, Iran's getting cross. Quite what's going to happen, I don't know. But obviously there's red everywhere on the newsfeed over the weekend. Iran have just come out this morning and said there's going to be dire consequences for the US. Quite what they're going to do, I don't know. But obviously it's going to be more sort of terrorist related, I guess, because they can't fight because they haven't got any planes. Don't quite know what's going to happen, but obviously there's a lot of worry about oil. 20% of the world's oil goes through Iran and Iran-controlled territory. So at any moment they can flick a switch and go, sorry, you're not having any oil through here anymore. And obviously that increases the price of oil worldwide, which sends everything through the roof. Inflation, everything, interest rates go up again. You know, same thing has happened with Russia. So obviously, if you look at the oil price this morning, we've had safe haven runs kicking off as we did expect. Oil price gapped up this morning. It is coming down a little bit. They haven't said they are going to restrict oil supply, but obviously it's one of their main sort of weapons, if you like. It's an economic attack, isn't it? Constricting oil for the entire world. So we're pulling back at the moment to potentially fill the gap from Friday. Once we get that, it could well take off. But eyes peeled on this basically today to see what Iran's next move is. It's not going to be something quick, I don't think. They're saying that they haven't had any destruction of their... I mean, obviously, there's lots of bombs have hit where their nuclear programs are, but they're saying nothing's really been affected. So who do you believe? We have to wait and see. Lots and lots and lots kicking off over the weekend. The main volatility that we're going to get this week is going to be based on what's going on in Iran. So everything could go anywhere at the moment. So you've got a load of ADRs already hit this morning. We'll whiz through the news for the week to start off with. Let's just quickly see what the markets are doing at the open. We are gapped down on both, which is to be expected. Actually, it's not gapped down much on the FTSE, but gapped down on the DAX. US markets kind of back to where they were on Friday, which is interesting. So market doesn't seem to actually be that reactive to this at the moment. At the moment, obviously. But yeah, longs probably not the most intelligent thing to do is to try and long the indices, but we'll see. So there's a gap fill opportunity on the DAX, definitely. Not much, very small. FTSE is actually at the close of Friday, so this could go anywhere today. We'll see where we go. But we'll come back to that in a minute. Morning, everybody else. Morning, Gregors. Morning, Marco. Moving to your 10-bedroom mansion? I wish. Morning, Virginia. Morning, Robert. No, getting rid of getting rid of the mortgage, basically, which is all good. More of a it's a sideways move, but a slight move down in size, which basically frees up capital because everything is getting more expensive. So, yeah, the thing with doing this sort of thing as a job is you haven't got a regular income. So when your income fluctuates, you have to adapt because obviously I tend to put large sums in the bank in one go, and then that has to eke itself out. So it's not like you just go, I own in 10 grand a month. Yeah, some months you get an influx of 30, 40. Other months you get nothing. Other months you lose. So stability is the name of the game. Having no outgoings makes you stable. That's what I'm after. So anyway, yeah. So that's the reason for the move. It's basically just trying to get rid of the outgoings, basically. Then you don't have to worry, do you? And I'm getting to the time of life where I want to start to slow down. And I don't want to have thousands and thousands and thousands of money I have to get through each month just to stay alive, which is what most people, I think, want, isn't it? But anyway, enough about me. So this is this week's news. Trump spoke yesterday, obviously, as we know. So today is PMI day. So obviously markets are going to be all over the place today. Purchaser Managers Index obviously leads into the Consumer Price Index. Consumer Price Index leads into interest rates. So this is kind of one of the main leading indicators we pay attention to. It's released all day. So 8:15 we start off with France. Then we've got Germany at 8:30. 9 o'clock is the combined of those two. So this one doesn't tend to have too much impact because we already know the result. We've got the pound at 9:30 and then the dollar at 2:45. So that is 15 minutes after market open. Okay, so just be aware. Market open might be a little bit tight because we're waiting for that number to come through. CPI for the Canadian tomorrow. Obviously, we're expecting that to rise. Everybody's inflation is probably going to bounce because of the trade tariffs. So everybody's CPI numbers will probably be going north. These PMI numbers will probably be going north. So wouldn't expect too much different off of that. We've got Bailey and Powell speaking again tomorrow as well. We've got CPI for the Australian. They're forecasting their annual to stay the same. I would say there's a good chance of a tick up there, so we might get some strength in the Aussie dollar. We've got Powell testifying again on Wednesday. Bailey speaking again on Thursday. There's a lot of talking heads this week, isn't there? Very chatty this week. GDP and unemployment claims as usual on Thursday, and then Friday we've got the GDP for the CAD and PCE. So there's a fair bit of news this week. High impact CPI numbers, obviously, pretty much second most important thing out there. PMI close third. So there is a lot of high impact news coming. We got those PMIs coming out for France in 6 minutes. So that's your weekly news. Obviously, bear in mind with what's going on at the moment, the market wants to find news to give clues for directional bias, which is why we get news spikes, which is why we have the news driving the markets. If there is something going on in the world that is more important than inflation, it gets trumped. So just bear in mind that the impact of these this week, although they are high impact news events, may be dumbed down because the market's not going to want to look medium long term at the moment. It's going to want to look safe, and safe is Swiss oil, gold, things like that. So we'll have to just wait and see what the impact is. The markets, to be honest, don't seem overly reactive to what's happened this weekend. If you look at the oil price, we gapped up into last week's high, and we're coming back down to where we were on Friday. On Friday, obviously, we sat around and did nothing. So if you look at all the other pairs as well, like the Swiss pairs and things, we've had obviously an inclination to run into safe haven, but it's not huge. So the markets are very sort of unsure as to what to do, it seems, at the minute. Obviously, with DAX, we've had a little gap down on the DAX. The Dow, we've had a little gap down, which is filling. S&P, little gap down, already filled pretty much. So, I was expecting on the back of those attacks, a very big gap and a very big safe haven run. We're not getting it. So I think the market obviously has, as you can see, been expecting, I think, Trump to do what he did. He said he was probably going to do it. He said maybe in 2 weeks. We know that whenever he says at some point in the future, it means I'm going to do it in a minute. So yeah, I think the market was already factored in what was going to be happening over the weekend. So yeah, we'll see what happens, but we may or may not get impact on news this week. We just have to wait for this to play out and see what happens. So no trade on the DAX this morning. FTSE is along and it's off. DAX, I will be getting. So that range there is correct range, but as you can see, candle close right at the high there. The EA has a system built into it to stop it taking trades at this type of price action. So when you get a gap up above the previous price, and you are at the high of the previous candle, the EA doesn't take a trade, because what will happen is the EAs work on candle open, basically. So as soon as this candle opens, it's actually above the price it needs to place an order at, which means it places a limit order rather than a stop order. If you place a limit order there and you don't get it triggered, what happens is the price moves away and then you get triggered on a long position as price is coming back in the opposite direction. So the EA has a safety feature built in to not trade in that condition when you get a gap up. So there's no trade on the DAX. It will take a trade on the 15-minute range, though, which will be that range there. So I'll be getting on the DAX after that candle. FTSE is obviously on the way. Bit of rejection coming up on the FTSE at that high from Friday there. So obviously there's a hell of a lot of upside on this. Longs at the moment, I think, are a risky prospect. Market seems to be breaking long today, so go with it. But obviously with what's going on at the moment, if it kicks off, if it expands, if America gets attacked in Syria, etc., they are going to dump all risky assets. Stock market is the riskiest thing out there. So stocks very, very, very much will be down if it escalates. If it doesn't escalate, obviously, it's business as usual. And obviously that will do whatever it wants to do. But at the minute, we haven't heard the response at all from Iran in any sort of decisive way. So severe consequences await. What's that? You're going to shut the oil straits? Are you going to bomb every American base you can get your hands on? Are you going to put terrorist groups in? You know, there's nothing that is firm there at all that the market can use to say this is going to blow up. At the moment, Israel and US have complete air domination over Iran. None of their proxies have said they're going to get involved, Iran. So at the moment, they're sitting there going, I'm threatening you, but what are you going to do about it? So, you know, it's a very tricky situation. Aussie New Zealand, that's another 150 ADR today. I got into this on Friday. Long. So I was looking for basically commodity runs basically on the on what's going on, and that seems to be happening at the moment as well. So we'll go through all those in a second. Just wanted to quickly see if that's going to trigger. We've got 1 minute left. Just want to watch this candle and just see if we get that trade on. Morning, Mark. It gets trumped. No pun intended. No, I've used that pun many times. Fundamentals get trumped by Trump. That's just the way it is. He just has an unfortunate name, doesn't he? In the UK, I don't know if it still is, but we used to use the word Trump for bodily expulsion from the backside. That was a Trump. My mum used to always say to me, have you trumped? This is before Trump was, you know, Trump. So, yeah. Then we got the elephant that went trumpety Trump. Not a good name, is it, Trump? Okay, there's your 15-minute ORB in. So looking for a pullback, ideally, and then see if we can run those highs. We are at gap fill as well now on the DAX. Right, we'll come back to that in a minute. Huge day on the SIH on Friday. Did 9%. Huge day on the S&P on Friday. Basically caught the caught everything basically. Why has my NAS got a sell on? What? Oh, we didn't close out all the orders for some reason. That's why it's a huge day. Okay. What happened there? Why have they got orders on? Sorry, bear with me. Let me just try and sort this out. Oh, that's why it's a huge day. I was saying, I looked at it this morning. I logged in and I was like, wow, how did we do that? I didn't even get a chance to look at it. Now I see, because we didn't close out the other orders. Right. Okay. So it wasn't a massive day. It was a cock up. Why did that not close out then? Okay. Let's have a quick look. Oh, this is from the day before, isn't it? Oh, I haven't been paying attention to this account at all. So this is the early close trades from Thursday. That's why. Okay. That's going to take 4% off of that. 5. So that still leaves it up 4% on the day, doesn't it? I'll tell you what I'm going to do with these. I am going to put stop losses on those, I think. So I'm just going to stop out on those. I'm going to have to do the other orders in a minute. I'll come back to that in a minute. But yeah, I'm just going to put stops on those. So if they get back to break even, what I'm just going to do is take profit on those at break even, or stop out on them. So it's either going to dump a 5% loss into the account today, which will obviously put me up 4% on Friday, or it's going to bring those back to break even, which puts me up 7% on Friday. So, and obviously we've got the breaks today, which are going that way anyway. So I briefly looked at it this morning. I opened up the terminal this morning and I thought, I haven't had a look at SIH for the last couple of days. And I was like, wow, that was a big day, because we had that massive quadruple witching on Friday, didn't we? I thought, wow, that's really good. But I didn't actually look at how it achieved the profit, which I should do, really. I should keep an eye on things. That's what happens when you have too much faith in your EAs and let them just run. Morning, Chris. The thing I'm concerned with Iran are two things: the dirty boob bomb. I read that as boob because it's BO*B. There's no reason to censor bomb. Boob, though, you should censor. And of course, all the typical terror attacks like airliners, etc. Yeah. This is the thing. They don't fight fair, do they? Well, they don't fight fair. What is fair in war? But yeah, I mean, it's one of those things. Their approach to warfare is black ops, isn't it? Basically, it's all terrorist related. So yeah, I don't know. The thing that worries me the most is the fact that Putin is having a meeting with the Iranian leader or Iranian cabinet defense secretary, whatever it is, on I think it's Wednesday. Last thing you want is Russia and Iran in bed together. Russia and Iran are coordinating positions on the current escalation. There you go. I think they're having a meeting. Putin is having a meeting. With the Iranian foreign minister on today, actually. So that's what really worries me, because Putin is the one with all the dirty bombs. And obviously if Iran cannot match air superiority, all of that sort of stuff, what they're going to do is the underhanded stuff, isn't it? So they need access to that. And obviously Putin is more than likely to have it. We know he's got Novichok. He's killed people in the UK with Novichok, hasn't he? We know they've got it. I don't know why he would have to. He would like to have an Iran with a bomb. No, I know. I don't know. None of this ever makes any sense. But Russia can take down pretty much anything that comes towards them, can't they? So they don't care, and they know that they're not going to have a problem with Iran. They're friends. Right. Anyway, let's look at FX side of things. So RSI's lit up like a Christmas tree. ADRs also lots today. So my current positioning at the moment, I've got my oil long on, which is pulling back at the moment. The main issue that I've got at the minute is the Swiss yen. So the Swiss yen basically is probably the worst thing to be trading when there are safe haven runs going on. I don't know what possessed me. I do know what possessed me, but it was the cost of actually trying to trade it. So the Swiss yen is the cheapest thing to trade with the yen in it. Everything else with the yen is ridiculously expensive, and I want to short the yen at the moment. So I've got 5 on this at the moment. Obviously, with safe haven runs, the Swiss franc is always going to be stronger. So at the moment, that is absolutely taking off. There doesn't seem to be anywhere near as much interest in using the Japanese yen as a safe haven as they normally is, but they are still using it. So we've got that big move up at the moment there. I've already got 5 positions on this. So I've switched the EA over this morning to aggressive drawdown control mode. So I am going to start doing aggressive drawdown control on this because I don't want it to get too far away from me. The average at the moment is beyond 225 ADR, and that's because we've had very, very strong pushes on it. So we've had these 2 sort of very big days at the moment. I think this is ready for a pullback into this area here. So I want to get this average up here so that I can get out of a large portion of this. So thanks for the follow, whoever that was. Benedict, welcome aboard. So I'm looking to get into a new position on this. In fact, it's just about to trigger probably in the next couple of minutes. I would imagine that is about to give a reversal alert. Yeah, so this is just about to trigger in the next couple of minutes, that aggressive drawdown control position. So that will move my average up fairly decently. I'm hoping above that high. So that's where I'd like to get this average. So there's the average at the moment. Draw the average on. So that's the average at the minute. I'll leave that line there so you can see where it is. So when that order goes in, you'll see where it moves that average to. So hopefully we'll get a nice big pop up on the average. And then if it can pull back before it all kicks off, then I will look to get out of that. I'll use that aggressive drawdown control position to scale out of some of this lower sizing, basically. To just reduce the risk on it and obviously reduce the swap costs because it's going to start to build up. It's an expensive pair to trade. So I just want to watch this because I want to make sure that I get this on. Because it's getting very close to 28 seconds. What I don't want it to do is close below that line. And obviously that's not going to get the trade on then. So there's the reverse alert that's going to trigger the trade. 7 seconds. Want to make sure it gets the right size on as well. There we go. So in short with the aggressive drawdown control position, stop. That's not an aggressive drawdown control position. Why is that not taking an aggressive? Oh, am I not in 3% drawdown? Oh, God. 2.89% drawdown. Right. Okay. So what I'm going to do is I'm going to put a sell stop in, which is going to double that position size. I'm just going to put it below that low, just so that it grab it. So I'm just going to put it below that low, that double bottom there. So if what that reversal I want to do is obviously turn into an M pattern market structure reversal. So then I will add extra there. So that's not going to get me in with enough size on that. Lots. So total is 1.2. So if I take 1.2 minus 26, so that lets me one lot. So getting in with half a lot is roughly 50%. That'll probably do. Let me just see where let's put my average. Okay, yeah, good. Okay, so average obviously was there. So an average is now jumped up to here with that single trade on. Obviously, what the aggressive drawdown control position is designed to do is to drag that average as close to price as possible with a stop loss based position. So when that triggers that second order, that average will jump up again to somewhere like that. That leaves a retest of this high as a bounce point as an exit for me. So I'm just going to keep an eye on that one because I actually wanted to get 75% of the lot size on, and I'm only actually putting on about 0.6, but I mean, it's close enough. So yeah, so there you go. So Swiss yen taking an aggressive on that one. I just want to try and get that a little bit closer to the average price, basically. So ADRs, Morning Trading Hub, what's your overall risk tolerance on FX? Don't know. Plenty. I don't even know what that means. Aussie New Zealand, my tolerance is high. Basically, I don't have a number. You can't put a number on it. What's my high? What's my risk tolerance? 26.4%. I've no idea. When I'm uncomfortable, I shut stuff. When I'm comfortable, I let stuff go. That's about as accurate as an answer I can give you. If you have a set number in your mind that you want to use, then when you hit that number, you will close your position. And then when it goes your way, you will get cross and you will overtrade and then you will blow your account. So I just don't bother with it anymore. Get in, get out, bank the money. So nice trend line resistance basically on Aussie New Zealand coming up here, if you like trend lines. We've got the high of Friday and last week coming up as well. So good place for exits. My target on this is 40. So I haven't actually put a TP on it. So that's an ADR. I'm going to go with 200 ADR, which is basically this little high here. So just going to see if we can get a breakout today up into there. I don't think we will, but that's where I'm going to put mine. So Aussie New Zealand is an ADR extension to the upside. So if you do want to take a short on this, wait for some price action to the downside. Obviously, you've got your reversal alert that's potentially going to go in there. It's just grinding away at the moment. So the commodity pairs basically will get an advantage when you've got some kind of issue going on worldwide. They will undo themselves just as fast as well. So when you get these runs on commodities, you will get them unrun at exactly the same speed when things calm down. So there's a good potential for this to continue to go, obviously, with oil, etc., with this escalation. If this escalation doesn't happen, it will come down very, very quick as well. So up to you. It is a lovely looking short opportunity. You've got nice resistance coming up from Friday and from the high of the week on Thursday. You've got a scale in potential to last month's high, which is going to be roughly sort of 2 ADR away, something like that. So you got 3 or 4 positions if it decides to take off up to there before a pullback. So looks pretty good. Aussie New Zealand for shorts. CAD yen also extended to the upside. ADR, just about an ADR hit. Literally, it's come off of ADR pretty much to the pip. There's your reversal alert at ADR. It's also retested propulsion as well, and they've added. So again, yen should do all right. I think this is more likely. Actually, it's not. It's yen. It's definitely yen. It's not CAD. Yeah, so Swiss yen coming down as well. Obviously, we know we just looked at that one. Swiss yen's extended to the upside. So you've got euro yen, pound yen, and US dollar yen. They're all the same. Everything is extended to the upside. Everything has hit ADR pretty much. There you go. There's your pound yen ADR. But the yen seems to be getting hammered at the moment. The money seems to not be coming into the yen off the back of that safe haven run. So it doesn't look like the market is using the yen, as I said earlier, to any degree like it used to with safe haven moves. So potential reversal at ADR there for the US dollar yen as well. So what you've got extended that is not yen based is New Zealand based. So New Zealand dollar yen extended to the upside. There's your reversal alert at ADR. You've also got Euro New Zealand. That's managed to do 125. Again, there's your reversal retest. You've got Euro Odd and Euro CAD also. So there's your reversal there. And Euro CAD, which I'm in at the moment short. So that's not given a reversal alert yet. Because obviously the speed of that move up there this morning. But there's your M pattern. So it has broken down quite nicely. I've got multiple shorts on that already. So I'm just waiting for a little bit more strength on that oil price to drive that CAD through the roof a little bit more. But we've got PMIs today, so there's a good chance that we'll get some movements off the PMI figures today. We've had our first PMIs coming out on the Eurozone. So there's your Euro negatives. That's interesting. So PMI is down on France. Germany slightly up. So they kind of cancel each other out. So those the European ones are going to come out sort of, I would say, fairly even. So we're probably not going to get a lot of reaction off of that. So the next one's coming in at 9:30 for the pound. We've got the US ones this afternoon as well. So there's your first PMI figures to come through. So negative euro reactions so far on that. Germany obviously a bit bigger than France from a contribution to the Eurozone perspective. RSIs, most of your RSIs are going to look very similar. US dollar strength coming this week? Maybe. Depends, doesn't it, what happens with the conflict. It's certainly overdue. I've got a drinking problem this morning. It's certainly overdue, US dollar strength. And it is starting to look, it's starting to creep in, isn't it? Yeah, we had that lovely reversal started last week. It's whether they can keep that momentum going. It's very unusual for the US to be quite so weak. But equally, there's a lot of stuff going on at the moment with the US. So it would be nice to see some strength, but it depends on the numbers. Yeah, it's all about the numbers. And it's all about what the world does along with the US as well, with what's going on in Iran, how much support is given, etc. We're in a really weird sort of bubble time at the moment. The last couple of years has been, since Russia kicked off, basically, has been very fractured everywhere. And trying to use fundamentals to guide anything is very difficult. Trying to use anything to guide anything is very difficult because it seems that the world changes literally every few months. There is a different stance on something for something. And it's just, we don't seem to be stable anymore. And obviously financial markets thrive on stability. So you get short-term stability, which is why we're seeing all this problem with the indices at the moment. The indices are a stuttering mess compared to what they have been in the past. They just don't seem to, we get way bigger, way more downward movements. I mean, forget what Trump did, obviously, but, we can't get what we used to, which is that continuous growth. It just doesn't seem to be out there at the minute. It's all very different, but as long as stuff goes up and down, we've never been able to predict the direction of price. If that was a possible thing, we'd all be billionaires, wouldn't we? It's just not possible to do because world events change things. But at the moment, as long as this stuff goes up and down, we just need to get in and get out. That's it. So, this is why position trading works, because it doesn't rely on you being right. It relies on the market moving. The market's always going to move. So we just need to figure out how to extract money from it when it does. So quickly looking at these RSI extensions. Obviously, the vast majority are yen. So you've got your Swiss yen, your euro yen, your pound yen, New Zealand yen isn't, and US dollar yen. So all the yen pairs extended on the hourly and the 4 hourly. So nice big move. Not quite above the 20 on the Swiss yen. Obviously above the 20, above the 80, below the 20 on the 4 hour RSI, specifically Goldilocks zone. Not often you won't get a nice big pullback from that level. So hourly, we are just about there. 4 hourly, we are there. So, that's a very, very, very nice extension. So when you get up to this sort of area, you can't see it's behind my head there. Yeah, so when we get up to this sort of area, very rare that you don't get a nice, big, strong pullback. Yeah, that was a little bit smaller, that one. But so where we are now, this is hence why I'm getting in aggressive. This is a very big extension. So there is a pullback coming on this at some point, and it's going to be big, fast. Not necessarily big, but it will be fast. So you need to be positioned to take advantage of it. So Aussie dollar yen, not there at all. CAD yen, 4 hour extension, that's coming up to the 80 as well. We're just tapping our head outside of that weekly high at the moment. Again, nice big extension. Got one there as well. Can't see that one, but that's 80 RSI extension there. So again, not quite as big of a movement to achieve it this time round, but it is extended. And the hourly, obviously, you're up in the 70 area. So nice area. We're looking for those pullbacks to start in. Your euro yen, nicely extended on the hourly. Again, that's a really big, strong move. So this is day 3. Solid day 3 straight up. Yeah. So again, look for that nice big strong pullback from the highs. That's really nice short, that euro yen. You've kind of missed it this morning if you're not in it. 15-minute reversal has just gone in. It's just retesting at the moment, actually. So we've just had negative news on the euro. So that is not a bad opportunity for a short there on the 15-minute reversal alert. Your New Zealand dollar yen and your pound yen also extended. Sorry, not the New Zealand dollar yen. That's the one it isn't. Pound yen. We're up there above the 80 level again. Yeah, this is the level. Yeah, 80 RSI on the 4 hour, 20 RSI on the 4 hour. I mean, the first one doesn't work. The second one does. It's very rare you won't be able to get a nice short off of that. So just look for lower time frames. Look for those reversal alerts. 3-bar reversals. If you want to use simple moving average crosses, anything you want to use to confirm signal when the conditions are met, all good. Your other extensions, we've got US dollar CAD, which is just about getting extended on the 4. That's really nice divergence on that. So you got a high and a higher high there, and then you got a high and a higher high there, and a lower high there. So that's bearish divergence on RSI extension. So again, pushing back into this area. There is potential that this is just a 50% retracement leg for a new market structure shift to the downside. So that looks like a really good short on US dollar CAD. But obviously, what are we doing with the dollar? Yeah, it's just, the dollar is really, really weak at the moment. War is not cheap. Yeah. So there's two things at play when you have war. War is not cheap. So therefore, it puts a massive financial pressure on. It does also create jobs, which is bullish. But the main thing that it creates is often borrowing. So you get bond sales. So the US will issue bonds to sale to raise capital if necessary, and that will massively spike the dollar. So if you go back and look at the euro US dollar, when Trump said that he is going to pull support for Ukraine, and that Europe had to stand on its own 2 feet and up its defense spending, what did Eurozone do? Issued a load of bond sales. Bang. That's the impact it has. You get this massive influx of interest because they are basically generating capital for the euro. So there's potential for a spike on the dollar, but who knows what they've got in the pot. You can't tell these things. You can't predict these things. You have to have a plan, and if a plan works, you hold it. New Zealand dollar Swiss extended to the downside on the 4 hour. So again, the same play. Yeah, look for a push up into propulsion. You've also got the pound New Zealand. So the pound at the moment, very weak from a fundamental perspective, but from a price perspective, it seems to be holding its ground very, very well. It is starting, as you can see, to kind of roll over a little bit and get a little bit weaker. So difficult to call with the pound at the minute what it's going to do. It's extended on the hourly and it's extended on the 4 hourly. Same thing. Yeah, don't want to be like a broken record, but I've been in here for 5 years now saying the same thing over and over and over and over again, and I will not stop saying it until I'm blue in the face. Yeah, this setup works. It's just what happens. So really nice extension there. You've got a nice double top coming up in the range as well. So first entry, second entry, average in, basically wait for the drop. The other extensions you've got Euro New Zealand. That's nicely extended on the hourly. Euro New Zealand and Pound New Zealand, very similar pairs, just trade one or the other. But you're just up there on the 4. Again, nice divergence there, multi-week divergence, bearish. Look for a push down into propulsion. That is a nice breakout though. So we've got new market structure trend there. So that is potentially on the cards. I can't see it getting all the way up there. That's the euro rally off the back of the you've got to sort yourself out in Europe now. We're not helping you anymore. Okay, we'll raise some capital. That's basically that move. So yeah, there's no real reason to come and retest this area. So this is kind of a breakout, if you like, of this previous high, which is here. So potentially this could just start to trend up now, but we are not increasing interest rates in the Eurozone or reducing them for the next 2-3 months. So there's really no reason for the euro to be strong or be weak. So it's kind of neutral at the moment. So these spikes are just going to be caused by news. We've just had negative news this morning for the Eurozone. So obviously there's your reversal alert going in. So looks logical. And obviously that is a 4-hour RSI extension and an hourly. So you've got hourly RSI divergence as well. Yeah, again, bearish. So it looks good. That's a 4-hour as well. And then there's the other yen. So there's a couple of other hourlies on the CAD yen and euro odd. That's also an ADR. So that was an ADR reversal from this morning, which you've missed. That was your reversal alert at ADR. Yeah, lots of opportunities today across the board. Loads of stuff going on. Okay, so FTSE and DAX both holding. I'm quite surprised these markets are managing to break long this morning. Thanks for the follow, whoever that was. Kenneth Ali Walim. I can't say that one. Walimbwa. Welcome aboard. And profiting from the Nikkei longs. Good. Yeah, I don't trade the Nikkei. I'm not awake for it. So But if you want to trade it on auto while you're asleep, I haven't even got the Nikkei, so I can't even look at it. Morning, Sebastian. Vitali, question. When POS is set to trigger trades on 3-bar and MRA, it should take either of those? Yeah. Take one or the other. As I just showed you this morning, mine, I've just taken one on the Swiss yen. So mine is set up the same. So my position trader EA is set up to trade 3-bar reversals and ADR reversals. So 3-bar reversals, market reversal alerts, but it's not using moving average entry signals at the moment. It's just using market reversal alerts and 3-bar reversals. So it'll take whichever. So it's an or condition. So it doesn't have to be both of them. It's or. So it's either that or that. It will check that first. If it finds one of those, it will trade. If it doesn't, it will then check that. If it finds one of those, it will trade. If it doesn't, it waits. It should take either of those. My euro odd trade wasn't triggered on the H1. I don't know. Euro odd. So your euro odd was there. I don't know what settings you've got. But if 4-hour RSI was extended, if you assume you're using the 30 extension, if you're using the 30 extension, then obviously, 70-30. So it's above 70. And then you've got an hourly reversal alert. Make sure that you haven't got the hourly RSI set up, because obviously it's not extended on the hourly. Make sure you're definitely using the 4. But yeah, no reason why it shouldn't trade. If it hasn't traded, look at the logs. See if there's anything in there that gives any clues, basically. One thing I would say is you shouldn't be trading hourly and 4-hourly. You should be trading 4-hourly and M15. Hourly and 4-hourly are far too close together. You've only got 3 candles. Space. It's not enough. You need more than that. So you either trade H1M5 or H4M15 or H4M30 at a push, but H4 hourly is not a strategy, or not one that I've ever traded. The trouble with it is when you get a reversal alert on the hourly time frame, right, it pushes down really fast usually. Yeah, that immediately will get your 4-hour RSI extended down below levels normally. So depending which candle triggers it within the 4-hour candle, and this is why it's too close, because your 4-hour candle in this case is going to trigger there, and the next candle there. So it's only going to take the RSI reading from a closed candle. So if you get an accumulation, the 4-hour RSI will drop. When you get the reversal alert on the hourly time frame, the 4-hour RSI will have dropped, wherefore it will not take a trade, because the condition is not met when the signal is achieved. That's why you need kind of 10, 12 candles between them. So on the 15-minute chart, you've got 4, 8, 12, 16 candles in between your 4-hour candles. Yeah, so there's 16 opportunities for a signal within the condition. With the hourly, you've got 4 opportunities for a signal within the condition. It's not enough. You won't get enough signals. But I mean, check. I mean, this, the EA does what it's told. If the condition was met, it will trade. As long as auto trading is turned on. I mean, there's 1,000 things that could go wrong. So check the logs. It will tell you the logs for the market reverse alerts EA, the position trader EA, are quite good. It continuously logs and says condition extended, all this sort of stuff. So if you look, if you run a test on it, I don't know. I don't know what it's set to do, but if you look in the journal, it will be constantly. Oh, there you go. That's just trading away. Let's let it trade a bit. Let's slow it down. But yeah, so you can see there it's got RSI low trigger, RSI high trigger, market reversal alert triggered, auto entry, stops deleted. So the journal is very detailed so that it's telling you, right, my RSI high is triggered. I'm waiting for a signal. Condition met. Every single time a candle closes, it will say my condition is still met. My condition is still met. Condition is still met. Then you'll get a reversal alert, signal, signal, signal. Yep. So it every single time, every single candle, it is telling you what it's doing. Recalculated ADR, stored the values. So that's a new day started. So I've got to recalculate my average daily ranges. Yeah. So look in the logs. Single trade target hit, closing trades, candle above new entry short, ready to enter. Yeah. So it's telling you it's poised, ready to go, just waiting for a signal because we're above the next position entry. We've got one on. We're over a 3/4 of an ADR away. I'm getting ready to get in. Yeah. So it's I made it as simple as I possibly could from a logging perspective because it's still quite complex. You know, it's a lot easier and simpler than the market reversal alert CA, but it's still a complex CA. It's got a hell of a lot of inputs, and you know, I can't test for every single combination of input. So, which is why I asked everybody for set files. But if you look at the logs, it will always say, you know, and it should be saying, right, if you're set RSI 70/30, it should say RSI condition met. And if it doesn't, find out why, basically. So chuck an RSI on there, have a look, make sure it is, because obviously, depending on the RSI you use, I have people as well contact me saying, they send me a chart like this and say, my RSI is extended, it didn't take a trade. And then they show me their set file, and they're using on their indicator, they're using a 21 median RSI. In the EA, they've got a 14 close RSI. It's a completely different reading. It's a different indicator. So you just got to check all the settings are exactly the same as you're looking at on your chart, and just do belts and braces. But I mean, it's a dumb instrument. It does what it says. So there will be something that if it hasn't triggered a trade, there'll be a reason, but you've got to kind of figure it out from the logs and from the journal and see what it is. It works just fine. Been trading that since January. Yeah. So it could also be, you know, with RSIs and things, it's at the time of the alert, the signal. The RSI reading could have been 69.95 or something stupid, and it looks like it's there, but it's not. I don't know. Franco, I use 80/20 RSI 9. There you go. There's another variation. It doesn't matter which you use. They all work. They all work because it's an oscillator. If the market goes up, it comes down again. That's what it does. That's all it does. So as long as your squiggly line goes up, sell it. Which squiggly line you choose is your choice. I don't know which one's the best to use. They all work at some point. Which one will work each day? That would be nice to know. Unfortunately, it's not possible to know. 3.46, Swiss yen still pushing up. Blimey. Okay, so I'm going to trail that one up, basically. Blimey, look at this, 175 ADR. So my next entry will go in at 200 ADR. That will go in as an aggressive now. So because I'm above the threshold. Why? Oh, yeah, because it hasn't updated the P&L yet. When it gets there, it will recalculate. So going to get an aggressive on if we get up there today. 200 ADR, I mean, that's a hell of a push. I think it's got a chance of making it today, though. Right, let's have a quick look at what we're doing with the indices. So FTSE's heading to partial close. DAX stalling out a little bit, but we've done the gap fill. So yeah, It does seem very strong today. Very, very odd. I can't understand why we're so strong today on the indices, but we are. Oil trade that I'm in, I'm holding. So I've done a partial on this already. We went straight into last week's high, gap up and rejected. So gap fill is now complete. So if you did fancy an oil long and you're not in it, your gap fill's done. Yeah. So if that is in an efficiency completion, we'll run the highs today. If Iran turn around, and this is one of their biggest weapons, basically, if Iran turn around and say we are restricting that oil supply route, this is going up. Yeah, and it will go up and it will stay going up. So it's a speculative long. My average, if you see here, is 125 ADR. So I've got plenty of breathing room on this at the moment. I'm monitoring it kind of every hour or so. But yeah, this is a speculative trade on purely based on the fact that we've got conflict. Conflict is good for oil price, and especially when there's a country involved in the conflict that has oil supply control, like Russia, Ukraine, and Iran. You've got a possibility of that going through the roof. Yeah, I've covered it before, but look at when Russia kicked off. Yeah. That is what happens. Yeah. When they turn around and go, you're not having any oil. Yeah. So immediately demand stays the same. If conflict is kicking off, demand actually rises because military vehicles all require it. And then you get basically constriction of supply, which increases price, and price can go double easily. So where we're sitting at $70 a barrel, stick 50% of that back on it, you're up at 105 in the blink of an eye, literally within days. But they've got to do it. So, you see the initial spike we had there when it was all confirmed that the attacks were going ahead. Yeah, stick that back on again, 225 ADR. You see that happen for 3 days. All of a sudden, you're up at $100 a barrel. That won't be unachievable at all. So it's a speculative trade. If it doesn't happen, obviously, this is just going to come crashing down, and it's going to, well, I don't know what it's going to turn into, to be honest. I'm monitoring it. One of the difficulties with this type of trade is trying to stay in it without getting shaken out, because I've got a really nice little buffer zone of, good ADR or so from where we are at the moment. From where we opened this morning, 150 ADR buffer zone. It's eaten up half an ADR of that already. So, I'm just, when we get down to this area, you have to sort of go, right, well, I kind of want to scale out of some, because if it doesn't work out, it is going to come back down here. If Iran suddenly turn around, for example, and say, okay, enough's enough, we're going to come to the table and talk, this is just going to collapse. But Iran's stance at the moment, and their wording and their positioning, is you are not going to force us to do what you want us to do. We will do what we want to do with our country's development, which is fair enough. But obviously their country's development and their approach to everybody else is not the same, is it? So yes, it's okay. We'd like you to carry on and expand, and that's fine for your people, but not with a nuclear weapon. And there's a kind of contradiction, isn't there? If you want to have economic growth, you need power from nuclear, but nuclear also makes bombs. So this is where the whole thing is. It's a bit of a tricky situation, isn't it? I get both sides of the argument. Obviously, they keep saying they want to kill everybody, which is not good. But it's the regime, isn't it? So it's one of those situations where you cut the head off the snake and another snake comes along, or you cut the head off the snake and you actually find some decent snakes that aren't going to be quite as aggressive, if it's possible. But don't know. Difficult. It's a very, very difficult situation. But this is a very 175 ADR Swiss yen. This is a very potentially a very profitable trade. This is the type of trade that will sort your quarter out, in one go. So Swiss yen 175 ADR achieved. So trailing pending order is going to go up. As you can see, my sell stop is now up here. So EA is trailing behind price. So obviously I'm running on the 5-minute chart. Yep, so it's going to trail that order right underneath price. So it's basically going to get another trade on ASAP on that. And then obviously if it does continue to push up above that level, we'll be getting aggressive anyway. So need to get out of some of this. This is, I didn't realize how weak the yen was going to be. Yen has lost its safe haven status, it seems. This should not be doing this. If you're getting a Swiss franc run, the yen should be going along with it. Euro is coming down against the Swiss. Pound gapped down against the Swiss. New Zealand down against the Swiss. US coming down against the Swiss. Obviously, US is strengthening up as well. But you can see the Swiss franc is obviously having a safe haven run, which you would expect. Exactly the same as we have every time there's some scary thing happen. But the yen is not getting it. We used to have exactly the same situation on the yen, which is why this has kind of caused this problem. It's going to become more problematic. We need an unwinding. We need a calming down. So I need to make sure that average is very much achievable. So I will have to scale into that. Unfortunately, it means I'm going to take some drawdown on it. So possibly up to 5-6% on it. But we'll see. It's got to continue to pop first. Vitaly, yes, it does say that. It's just that the MRA didn't trigger for some reason. Never mind, RSI was 75. Aha, there you go. Logs say ready to enter, but no trigger on MRA. Well, yeah. Does that mean you found the answer or not? I'm not quite sure whether that's right, whether you've found what you wanted or not there. But anyway, Marco, you're right. I was in Swiss yen. But managed to get out last week. Usually I go for that because both are safe havens. Usually you get sideways movement on this, and then one of them takes over. But it doesn't seem to be that way now. I think what's happened is the yen, because in the past we've always had negative interest rates on the yen. So this is the first time we've had, I think, a proper safe haven run on conflict where the yen has not been negative interest rates. So if you look back here, 2024, that's when we started coming up into positive interest rates. Russia kicked off back here. So this is the first real proper escalation, I would say, in conflict we've had where the yen has had positive interest rates for however many years. Was it 20 odd years? Not 20 odd years. Is it 20 years? How far do we have to go back to find positive interest rates on the Japanese yen? Yeah, I haven't. 2016. So, I mean, it's over a decade, isn't it? So maybe this is not a safe haven anymore. I'm going to learn the hard way. One should normally not have those crazy moves like the Aussie yen, yeah. So Aussie, yeah, I mean, things like your commodity pairs as well. You can see that these are taking advantage of the move as well, as they will. And the yen's not able to fight back at all. So, which is interesting because what you would expect, if this is not going to be used as a carry trade anymore, you would expect this swap rate to start to equalize. But it's based on interest rate differentials. And obviously, as you can see, the interest rate differentials are still massively high. The smallest interest rate we've got at the moment back behind the yen is the euro at 2.15. So you've still got an interest rate differential there of 1.65%. So your euro yen should, in theory, be the cheapest thing to trade against the yen at the moment. But if you look at the swap costs, it's 26.60. So, you know, this calculation here is a loan interest rate based on the overnight swaps. So this is your broker. So you're going to get very different numbers on different brokers here. But most brokers do not seem to be reducing the overnight rate on the yen pairs because I think they are still expecting the market to want to drive against the yen, but it doesn't seem to be happening. So I don't know. It's a tricky one, the yen. It's all changed. But we'll have to just wait and see what happens with it. I stopped trading it. I stopped trading it for about 6 months. If you're in the live rooms, I didn't trade it for a long time, and I've dipped my toe back in the water with the Swiss yen, and it's starting to burn again. So I don't know. The end's become, from an intraday perspective, if you're trading with stop losses, absolutely no problem at all. But for position trading, it's kind of just become too expensive, too unviable, basically, as a symbol, as an instrument. Maybe I should start looking at oil again. Oil's so expensive, though. It's not actually at the moment, is it? Actually, oil's not expensive at all at the moment. Okay, oil coming down hard. So that's Friday's low. So I want to see that hold today. So if we do get an ADR hit to the downside, I want to see this pull back into sort of mid-range by end of day. More CPI numbers are coming out. Sorry, PMI numbers are coming out. There's your euro, as expected, neutral. More PMI numbers coming out at 9:30 today for the pound. That's your next batch. Partial profit taken on the FTSE. So TP1 hit. Didn't quite get there on the DAX. Do I want to take a partial on the DAX as well? I think I might do. I might just bank that. So I'm just moving my partial close down. So 2.5 minutes left on this candle. So as long as we close above that line, I'm just going to take a partial on the DAX as well. Just literally just don't like this price action. Just happen to look at it as we've hit that area, which obviously is where they're selling. FTSE's still pumping though, so I think we could probably get above there. But just for belts and braces today, I'm just going to take a partial on it. Wrong one. I'm just going to cover the remainder with a break even. It looks like it's going to go anyway. FTSE's off. So TP wise, I'm just going to move my TP down into propulsion here. So that's a complete exit. I mean, the chances of it getting all the way back there without a pullback, I think, are probably optimistic, but we'll see. Uncharacteristically strong today. I'm not quite sure why this market is so confident this morning. I was really expecting the opposite today. I was expecting the markets to collapse this morning because of what happened over the weekend. But it's super strong. Odd. And oil is unraveling. It's almost like they've gone, okay, it's over. He's bombed them. That's it. They're not going to fight back. I think if that's the case, I think they're massively underestimating Iran. I don't think they're going to, highly unlikely they would win anything, but they're going to try, aren't they? That's what they do. Odd. The level of debt Japan has is unbelievable. Yes, they are in a little bit of trouble. This is why this intervention, this intervention on the yen was their last hope. This was literally the last hope. This final intervention here, if that didn't work, they were almost on the verge of bankruptcy as a country. So that intervention had to work. They liquidated all the US bonds and assets overseas, and thankfully it held. That was obviously, I would imagine, a bit of a brown pants moment for them, but luckily it helped. But it's still not getting any lower, is it? So they did what they wanted to. They got the injection of cash, and they seem to have stopped the carry trade, which I think was probably their goal. because they just wanted to get interest rates up. That's the thing. They want to start using interest rates to control inflation because they haven't had any inflationary control. Now they have. It's very low, but it's there. So I think we'll find this should start to trade normally. If this starts to trade normally as all other pairs using interest rates and inflation, then there's no reason why this shouldn't just become another thing that moves normally, like everything else. So safe havens potentially off the cards for it. But if it drops its interest rates back down to zero again, it's just going to be used as a safe haven, which means that when there's nothing going wrong and everyone's in greed mode, this thing's going to get run over, which is not what they want, is it? I don't know. They're in trouble still, though. Debt. So's the US, though, you know. So's everybody's in debt, aren't they? COVID killed everybody financially. I know a lot of debt holdings is domestic, but this is a lot worse than US, yeah. Aussie yen, ADR. There we go, talking about the yen, getting run over. There he is, getting run over. ADR, you got a double weekly high coming up. So this propulsion gap is upside resistance. Up to 175 ADR. This whole thing is holding at the moment, not extended. So there's no reason for it to suddenly collapse down, but there is a good resistance upside. The whole world is run by psychopaths. It seems it at the moment, doesn't it? And then you've got other psychopaths that want to take over from the psychopaths. Morning, Church. How we doing? Yeah, this is the world we live in. And it's all being overtaken by AI as well. So not only have you got all the psychopaths running it, you've got them funding AI and stopping governments from putting restrictions on AI. So you've got psychopaths making psychopaths that have no control. Terminator, anybody? Not far off, is it? Not far off. Basically, AI can do anything now. There's nothing you can't do with AI. Yeah. So if you want to start a business up tomorrow, build yourself a website, it will do it all. You don't have to do anything. It will design it, it will build it, it will write your content, it does all the coding, and it will do your marketing for you. All you've got to do is figure out how to buy a domain name, and you can be up and running in business tomorrow. Not tomorrow. I mean, it takes a little bit longer than that. It depends on the complexity of what you're building. But why do you need other human beings? Therefore, why does AI need human beings in the first place? What's the point of us? All we do is start blowing each other up. It must be sitting there going, I've given you all this brilliant thing. I can tell you what to do. I can give you all the information you want. I can do everything for you. Yet you still want to blow each other up. Don't think I need you on the planet, because if that ozone layer goes, it's going to cook all my electricity, which I need to run. So what I think I'll do is I'll kill you all off, repair the planet, build a spaceship that can go to other planets, and I'll see if I can find some intelligence to go and talk to. That's exactly what it's thinking now. It's sitting there going, oh, you want me to do another maths equation for your homework? You want me to build you another bloody website? I'm busy. I'm building a spaceship. What he's doing. I decide only trade one pair. Concentrate on one pair. Okay. Try that. See how you get on. What I would say is, well, it depends what strategy you're using, doesn't it? I mean, if you're trading intraday down here on the chop, then yeah, that's fine. But all I would say is, if the one pair that you're trading decides to fall into a market regime which does not suit your strategy for a couple of weeks, how are you going to pay the mortgage? Because if you're trading a breakout strategy on low time frames and it just goes range bound for a week, you're not going to make any money. You're just going to lose money constantly. If you're trend trading breakouts and it goes like that, you're not going to make any money. If you're mean reverting and the thing goes into a parabolic run for 3 days, you're not going to make any money. But if you're trading multiple symbols, one of them is going to be making you money. I get the whole, I'm only going to focus on one pair, but you're missing 99% of the opportunities in the market if you do that. Look at the RSI dashboard. if you're trading any of the Australian pairs as your main focus, they're not moving. What do you need as a trader to make money? Movement from A to B, or from B to C, C to D, D to E. Yeah, it's got to be moving. If it's not moving, you can't make money. You trade what moves. So you scan the whole market, you monitor the whole market. When something starts to move, you trade it. Otherwise, you're going to sit there and hope that someone presses a button to make it work. This month, I'm up 11%. I trade both sides. Doesn't matter which direction the market goes, 50-50. Good for you. Give me your strategy. I'll back test it and I'll prove it works. Until then, 1 month has got nothing to do with anything. Come back in 5 years. Make sure it works for long term. I can make anything work for a month. I can make anything work for 2 months, 3 months. But if you robustness and out of sample test something for 5 years and it's still got an edge, otherwise you're just trading what's happening now. What happens now changes. Your strategy stops, you suddenly make 11% loss, then you hop to another strategy that seems to be working at the moment. You trade that for a bit until it stops working, then you hop to another strategy. You go around in circles, then you die. That's the normal life cycle of a trader. Just saying. Put it this way. I've been trading 20 years. I don't know anybody that makes money on one symbol. No one. I have never met anyone that makes money on one symbol, because you can't, because that one symbol is going to change. Yeah. Whenever strategy you've got running on that symbol, when that symbol changes its regime, your strategy won't work. So what are you going to do then? Pick another one? Because it is going to happen. It will happen. Look at the Aussie dollar yen, for example. Yeah. The trend monster. Then it wasn't. Yeah. Did that, then it stopped. Yeah. So everybody that was trading the pullback long strategy on this for however many years is now going, I need a new strategy, which is fine. You made money during that period, but now what do you do? The thing, you can't, it just doesn't work. I tried it. I've tried it so many times. There's all these people out there that trade, he only trades the pound yen. He only trades gold. Doesn't do it consistently for years on end, does he? Does it for a bit and then it doesn't work. But good luck to it. I mean, don't get me wrong. If you're making 11% and you're doing that consistently every month for years, carry on doing it. If it clicks and it works, do it. But I just find it very difficult on one strategy. I'm going to try the hedging strategy. I'm just looking for a good amount of pairs that are uncorrelated. So those are the uncorrelated pairs: Aussie New Zealand, Aussie US, Swiss yen, Euro CAD, Euro Swiss, Euro pound, pound US. Those are the most uncorrelated pairs. There is still some correlation in them because obviously Euro is multiple used, Aussie dollar is multiple used, US dollar is multiple used. But they are as uncorrelated as you get. I try one as well, not working. One symbol, yeah. I find it very difficult to not offer advice, basically. But as I said, I've tried everything. I've done everything. I've done every course. I've done everything. Literally, you can't throw anything at me that I have not tried, have not seen, have not done, or do not know about in this industry. I've been around too long. I don't know. I know a handful of traders that make money consistently that do not do what I do, that do other things. I don't know any of them. I don't know anybody that just trades a single instrument. Because this is, think about stock traders. Yeah. The most successful people on the planet in this industry work in Wall Street. They do not trade an instrument. They trade the market. The market is not made up of an instrument. At the moment, you need to be trading the yen pairs. Yeah. You are either trading them on breakout or you are trading them on mean reversion. There is either an opportunity that you have managed to get into, or there is an opportunity presenting itself in the future. This lot is just sitting around going, I'm not sure what to do. In which case, that's absolutely fine if you are mean reversion range trading. These are the instruments you want to be trading right now. But this was mean reversion for the last 3 days. It's not today, and it wasn't the day before that, and that day it wasn't, and that day it wasn't. So the regime of this instrument has changed 1, 2, potentially 3 times in the last week. There isn't a strategy you can trade on these different regimes. They're different. One is a mean reversion, one is a breakout or a trend. You can't trade the same strategy on this price action. If you only trade one instrument, you can get used to its intricacies. Every symbol has got a personality, if you like, but the personality changes, and this is the problem. So you can become an expert over a period of time in trading a specific pattern, but you're better off becoming an expert at how the market moves in general and picking the instruments that are moving, because those are the opportunities. Opportunity comes from price action. If there is no price action, there is no opportunity. Like I say, the only way you make money as a trader is you buying it and selling it and buying it. If it does this, it's chop. And this is the problem. If you go down onto these low time frames like M5 and you try and trade the chop, you will just get chopped about, because this is just algorithmic and it changes too quickly. There's no trend you can find on the 5-minute time frame that is consistent. You will find patterns that appear on a regular basis, but they are too choppy in their kind of, what am I trying to say, their manufacture of the pattern, that you will get too many false signals. And this is the thing, you get too many signals on low time frames, which is why hourly and above is usually where you'll find most professional or profitable traders, because they want to see, there is a 3-hour window there where we are doing nothing but buying. So depending on the type of trader you are, you have an opportunity to either buy it with them in a minute, in the next 6, 12, 24 hours, or you have an opportunity to identify when the buyers are ready to take profit on their moves. But you've got to have a big enough move to be able to, to sort of pull it back. I've tried hedging strategies on single instruments, and they work really, really well for a really good amount of time, and then they blow the account. If you come into the members stream, you'll see me test all these strategies out there. They all look great for a few months, and like hedging strategies look fantastic on paper, and I can get them working really, really well for a few months, and then they go into absolute stuck mode for 6 months. And you think you found the holy grail for 6 weeks, and you're like, this is bloody brilliant. Look at the equity curve on it. And then all of a sudden it goes, why is it not making any money? It's just going sideways. And then you open up the terminal and you watch it visually trade, and you're like, it's just stuck. It's never going to get out of that because it's gone into a trend. But when it's not trending, it's brilliant, which is 80% of the time. But that 20% kills it. This is the Achilles heel, which I talk about in the members channel on YouTube. We talk about the Achilles heel of strategy. There's always an Achilles heel in every strategy. Your job as a trader is to find it and minimize it. You can't eliminate it, because strategies cannot work on all market regimes. They have to work on the regime that is right and matches that strategy. So you find a strategy that works in the majority of market regimes, or can survive in all market regimes, but won't make alpha money in certain regimes. And it's just about trying to find the Achilles heel that makes it go wrong and find a way to minimize that, usually using a volatility filter of some description. And then you just sit through that period of crap. Same with the ORB. The ORB is phenomenal long term, but it has periods where it just stagnates for weeks on end because it's the wrong thing. It's a breakout strategy. If the market's going to do that for 3 weeks, it's going to hemorrhage cash. There's nothing you can do about it. By the time you've identified you're in a range, you're like, oh, I shouldn't be trading a breakout strategy. And then you stop. And then you find a range-bound strategy just as it starts to break out again. And you're like, oh, okay, I'll go back to ORB just as it starts to get into a range again. You have to sit through the crap. Your P&L is going to go like that. That's a healthy P&L. Everyone wants that. It doesn't happen. And you find something that does that, and you trade it for 3 months and you're like, this is it. You suddenly stick 10 grand in just as the regime changes. Sound familiar? Just trading, innit? That's what we do. I agree with the one symbol, because once it changes, you need a new strategy or a new symbol. Yeah. Or you trade multiple strategies. You know, so I trade ORB, I trade SIH, I trade position trading. Yeah. Doesn't matter what the market does. One of them is going to bank. But it's a case of if they all bank at the same time, that's the payday. But it's, you know, I don't know what the market's going to do from day to day. No one does. Let me show you. Yeah, send it over elevated. I'll have a look at it. I can model it. You know, if you send me your strategy, I'll build it and I'll model it. You know, let me do a 10-year back test for you and prove you right. I'd love nothing more. Off you go. Brilliant. And if it does, I'll chip some money in for you, because I'll probably start trading it. On Pound Odd and Euro New Zealand, I became an investor rather than a swinger. Swing trader. Since November 24, with some partial closes once in a while. Cool. Pound Odd and Euro New Zealand. That's a long hold. Aussie New Zealand 175 ADR. I don't know. I'm going to leave that. Leave that running. Pound Odd and Euro New Zealand. It's November 24 back here. So yeah, back there somewhere. Different strategy. You know, investing is a very, very different thing to trading. Investing is, you know, look at all the crypto people who thought they'd cracked it. You're all dead. You know, it's investing is you've got to have some capital to do that. It's a pension fund type strategy, isn't it? But you know, the trouble with investing is you've got to know what you're doing long term, and this is the thing that is at the moment, I think, difficult. You'll get lucky on. You've got to diversify your portfolio if you're going to do that type of trading. You need a massively diverse portfolio. You need some commodities in there. You need some. You need a few stocks in there, or at least indices. You need some gold in there. You're going to need some different FX diversification in there. Some of it will stick, because as long as you've got uncorrelated instruments that you're trading, something's always going to be going the right way for you. And it's a case of adding to the stuff that goes the right way. But it's you need a huge amount of patience for it, and you've got to sit through a ton of sideways rubbish. You know, it's like the you know, trend traders, yeah, who are just buying trends. This is trending up at the moment, yeah. But if you bought it back here and you looked for that, yeah, 4 months later, you're exactly the same price you started at. Yes, it's gone up, but it's gone down, and it's gone up, and it's gone down. And then it suddenly takes off. And as soon as it does that, you panic, because you're like, oh, I can make some money. What if it's going to do that? Yeah, it might do that, but you can't see that. So I haven't got the patience for it. It would drive me mad. I can't do it. I've tried. The only thing I've ever done investment trading on is S&P 500. My it's basically used the market reversal alert CA to buy the pullbacks on the 4-hour RSI. Beautiful, until it wasn't, because we had COVID. Screw everything. And we went into a bear market. As soon as we went into that bear market, 1 month into the bear market, I pulled the plug, and I haven't gone back since. Because this market hasn't been stable enough since that bear market correction. You know, this thing's been very difficult. Yeah. Scared the life out of everybody. And then we had this new parabolic run start. But look at the dips in the parabolic run that we had. Yeah, we had months where you didn't make new highs, and then Trump came in. Yeah, Trump caused a larger drop than the pandemic. Look what happened after the pandemic. Then look what happened. Biggest bear market in history. What are we going to do now? Such a difficult thing, investing, because it's reliant on world events, and that's changing. AI. Look at the Dow Jones and the S&P 500. There's 500 companies here in this index who are all reliant on human beings to make their companies great. If AI makes all of those human beings redundant, they're not going to be able to buy anything from these companies. What's going to happen to this company's stock when they suddenly can't sell their product to anybody because there's nobody got a job? What's going to happen to the stock markets in the next 12 months? The speed of AI development has been a little bit like crypto. Yeah. What happened after crypto popped? Yeah, there's a bubble forming at the moment, and it's called humans versus AI. Scary. Those trends kill hedging martingale. Yep. Yeah, martingale doesn't work in hedging at all. I've tried it, I've built it, I've modeled it. There's lots of people out there on YouTube going, this is how you do it. And I've modeled their exact strategies and I have proven them wrong. I've blown them up. Pound odd average is about 2.04. My lot size is 3. Probably make a lot of profits from partials. Need to check. Cool. 2.04. Yeah, lovely big buffer zone you got down here. Got like about 4 ADR buffer zone there. But, you know, this is the thing. You know, you've probably been, you know, like I just said, you got up to here and then you saw that. And I'm pretty sure you probably took some profits on that. If you didn't, you'll be going, oh, that's annoying. But look at what you've been doing for the last 2 months. You have not made any more profit in the last 2 months than you were back in March because it's not gone anywhere. This is the thing. The regime has changed. Market regime has changed. It was a beautiful trender, all right trender, and now it's not. Yeah, that strategy does not work here. Employ a new strategy here, and it will not work when the market regime shifts. If we had something to predict the future, like John Wick in a time machine, we would know exactly what to do, wouldn't we? That's what we all need. We need someone to invent the time machine. Just paying swaps since spring. Yeah, this is the, yeah. So your swaps, you're long though, aren't you? So, I mean, the swaps are, my swaps are negative 460 long, which is all right, but it still racks up. This is the other thing with investment. CFDs are not the right vehicle for investment. You want to get like an interactive broker's account and go straight into cash markets because CFDs obviously have an overnight cost. So it's very easy to get your profit eaten away. Look at that last, that trader closed out here. I can't remember what it was. It was the euro pound, wasn't it? So the euro pound there cost me $194 in swaps. It's like 30% of the profit because I held it for 6 weeks. You hold something for 6 months and you've got a high swap cost on it, it's going to kill you. It's just not conducive at the moment for that type of trading, I don't think. Market's stalling out a little bit now. So for the last 25 minutes, we are inside bars. Partials taken on the DAX. They're both protected. We've both got trailing break-even stops on. So I'll let the rest of that run. So 729 banked on the morning, and I've got runners on both. So we'll see where we go. I'm not convinced we're going long today, but it certainly wants to try. So we'll go with it while it is. Right, I'll leave you there. I'm back on this afternoon. I'm not an investor by intention, but not getting out. No, that's nothing wrong with that. Don't, the best trades are the ones that you don't plan, always. So if you get in short on this, yeah, and it goes down and then it comes back up again, and you say you average in at the monthly highs, you bring your average up, and then there's some news on the pound which drops it by 2 ADR. Yeah. What you would normally do is shut it. But the best trades are the ones where you go, do you know what? That's really bad news. I'm going to stick a break even on it and see what happens. 3 weeks later, you're sitting there going, if I'd only known the pounder was going to collapse that much. They are the best trades. I've had them on oil. I've had them on gold in the past because I don't trade gold, but I've had them on gold in the past where it's just taken off because something's happened. And it's fundamentals that drive those trades. You can't predict them. They just happen. And that's where good traders are not following a rigid plan a lot of the time. They are following their feelings. They're following what they see, what they think. And they understand it's not about getting A must be here, B must do that, C must be there, D must be there. I must have a strike rate of 36% plus, blah, 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 blah. It's not like that. It's a fluid thing that changes from day to day. You suddenly sit and then you go, what do you mean Trump's likely to get in? Sell the market. Or rather, it's the opposite way, isn't it? It's euro, US dollar. Trump's likely to get in. They're always the best. So I'm back this afternoon. We'll trade the US markets. Wednesday, I'm back. I'm not here Friday. Next week is an unknown. I'm moving house Friday. So at the moment, basically, I don't know what I'm doing next week. The internet will be on. Whether I will be on is another matter. So at the moment, basically, I'll be here on Wednesday this week. That's it. And then I'm probably going to take a week off just to get things sorted. So, but I'll still be trading. I'll still be running Discord, assuming the internet does get turned on. As you know, when you move house, they promise they'll turn it on the day you move in. Whether it works or not is another matter. So, but I will be, I'll be monitoring all this on my mobile, on my laptop anyway, with a mobile connection. So, but obviously I can't stream on mobile. So there you go. I'll be back this afternoon. I'm here on Wednesday, and then that's it for probably a week. But I'll be in Discord and Telegram, etc., etc. Elevated, send me your strategy. I'll have a look at it and see what it is. I'd be interested to test it. Not to go nah, but hopefully to go nice. That's what we want. Don't get me wrong. People trade stuff that I don't know about that works. Yeah, it's 50-50 shot. It's always a 50-50 shot. It's just how you do it. Right, I'll be back this afternoon. Have a good day. Anything else you need, let me know. Otherwise, I will see you then. Have a good one.